Welcome to the Transparent FX Academy. I'm Nick and I'm a top author trading with over 190k reputation points. In this video, I will be speaking about GBPUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market, then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong historical support and demand area for this market. In fact, in multiple occasions, exactly from this zone, all these rejections to the upside have been created, confirming this area as a strong monthly historical support and demand zone. And what we can see is that we just had now yet another test of this zone. The market has already started rejecting it to the upside. So in a situation like this, more bullish price action could be created away from this area. So the monthly time frame does seem quite bullish. Let's keep that in mind and move down on the weekly time frame. Now, from a weekly standpoint, the situation is quite clear as well. If we have to identify the strongest structure level within the most recent price action, it would, without any doubt, be this level here. In fact, this zone was clearly acting as support all across this area. Every time the market tested it, the market reacted to that zone. Then we had the break below the area. And as we know, previous support, once it is broken to the downside, becomes resistance, and the market respected the level as resistance here. And then we had the break back above that zone, where this previous resistance was turned support. So the market is currently testing previous weekly resistance turned support, and there is definitely the possibility of a potential rejection to the upside away from this area. We can also notice that from a pattern standpoint, we have here on the weekly a clear impulse to the upside followed by a correction. And in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 50%, 0.618 and 0.786 Fibonacci retracements lining up exactly with this strong structured zone, therefore creating confluence of support inside of this area. And when you have a confluence of support zone, that is where you have an increased probability of getting more institutional longing, which at that point could further increase the probabilities of a potential rejection to the upside away from this area. So let's keep that in mind and move down on the lower time frames. Actually, the last thing that I wanted to show you is that we just had a shift from a weekly bearish market to now a weekly bullish market, because here we were seeing lower lows and lower highs being created. Now we are already seeing higher highs and higher lows. Therefore, the next logical step would be for the creation of a higher low here and then another higher high, so higher than the previous high. Let's drop down on the daily time frame and see what we have. Now, from a daily perspective, we must notice how even though everything is starting to align for a potential push higher, also the daily is still bearish. We're seeing lower lows and lower highs being created, so clearly we are still in a bearish trend. However, it is very easy to identify which structured zone the market needs to break in order to shift back to a bullish market from a daily standpoint, which is exactly the previous high. Because if the market breaks above the previous high, at that point, this previous resistance would become support. And after the break on the retest of the previous resistance turn support, that is where there is a good probability of seeing more institutional longing and the market to reject to the upside and shift from a daily bearish market to a daily bullish market, which at that point would also create a rejection away from the monthly support that we have identified at the beginning of the video and the weekly support that we have just identified. Now, let's keep that in mind and go and see what is going on when it comes to the commitment of traders, so essentially the COT data, and what the big players and institutions are doing in the market. So how are they moving their orders? Well, first of all, if we look at the net positions, we can see how they are already starting to shift to the bullish side for GBPUSD. In fact, we went from having minus 28.9k net positions all the way up to plus 44k net positions. This shows how institutions went from having a negative net positioning, so minus 28.9k net positions, meaning that we had 72.6k shorts compared to only 43.6k longs, all the way up to now having a positive net positioning, so plus 44k net positions, meaning more longs than shorts from an institutional perspective, with 102.5k longs compared to only 58.4k shorts. So this is obviously quite bullish for GBPUSD because it means that institutions are moving back to the bullish side for this pair. So let's keep that in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also linked in the description, so you never miss new updates. Now back to the analysis. So from a daily perspective, if the market will break above this structure, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes. So 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market at that point, I wouldn't be surprised to see a potential rejection to the upside, completing this daily impulse correction and impulse pattern to the upside. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. From here, in fact, you will have the possibility to gain access to my entire courses. You will also have the possibility to gain access to one-on-one live private mentoring directly with me, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this video, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down the website past the testimonials, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the sign-up process. So I really suggest that you go and check it out as soon as possible. The link is in the description and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.